Welcome to Your Financial Advocate with Greg DuPont from DuPont Wealth Solutions. As a practicing advisor and attorney, Greg teaches pre-retirees how to reduce debt and taxes and save with less risk so they have more spendable income and plan their way to a better life. Join us for this journey where Greg draws on years of experience and guest experts to help listeners achieve more spendable income for retirement.
Hello and welcome to Your Financial Advocate with Greg DuPont of DuPont Wealth Solutions. Greg, so good to see you again. How are you?
I am doing fantastic, Eric. How have you been holding up these days?
I'm doing fine. I am, life is busy. Life comes at us fast. You've got a guest on that I'm a little concerned about. He's in the middle of a stampede. I'm hoping he's safe.
We're hoping we can get through this before those buffalo catch up with them. Yeah.
Right. Greg, who'd you bring on the show today?
So, Eric, I am very happy to be able to present today's guest, Richard Davis. Richard is an expert in, I'm going to say, just about all things real estate related, but very much a source that people should know about. And he's got some information that I think that our listeners are going to really find very helpful as they are trying to navigate this new world that we've been talking about for the last several episodes.
Well, I'm very excited to hear that because real estate has been on my mind. You know that. So I'm going to let you get to it. And I'm going to learn with the audience.
All right. Thanks, Eric. So, Richard, welcome. Thank you for taking some time and joining us today.
Thank you. My pleasure. Good to be here.
So if you would, just take a moment and like to give you the opportunity to share a bit of your story, your entrepreneurial journey, what got you here, and what you consider to be your specialty at this point in time.
Absolutely. I've been at this for many decades. I got my real estate license when I was in college. I was 19 years old. So obviously I've always considered it my passion to buy, sell, trade, broker. And, my first couple of years I did the classic residential, buying and selling single families. I don't do that at all anymore. I just do multifamily real estate and large transactions of equestrian farmland, that sort of thing. So, I specialize in apartment buildings. I don't really do a whole lot of retail. Bill Gates told me not to do that about 20 years ago. And Amazon Prime came along and proved him right. So but you always need a place to live. And there's a shortage of housing right now. So it's definitely still a very opportunistic time to own multifamily complexes.
Well, and that's the core of what I want to talk to people about today with you. First of all, your passion and your experience comes through loud and clear. And thank you for sharing with me your book, Get the Most Money for Your Real Estate Investment, which when I read that, to me, it just kind of was a blueprint or a primer that anybody that's thinking about stepping into these waters could benefit from reading. So it clearly looked like a labor of love. You put a lot of work into it, and I'd like to acknowledge that. That very impressed me very much with that. And in the last couple of episodes that I've had, we've talked a lot about the change that is on the horizon with inflation and specifically how it affects people that are looking at traditional investment vehicles and how challenging that future may look. And I want to talk about the opportunities that are there for individual investors in potential real estate. And now, in all candor, I used to own a title agency for many years. I've been around real estate for much of my 30 years of my law practice. But I've always looked at it and said, dang, this isn't for me. I don't want to be getting the call to fix a toilet in the middle of the night. And so that's my perspective. And I'd like to start out there, if you could, for maybe somebody that's thinking about, okay, I've seen the opportunities. I know historically there's been no greater wealth generation vehicle than real estate, but dang, I'm not a handyman. I can't get into the flipping game. So let's start with that type of person, if we could. What do you say to somebody like that picks up the phone and says, Richard, your son told me that I should talk to you. I really want to get in this, but I'm not sure. What would you say to that folk?
Well, first of all, I do not And I've been building houses. I've owned hundreds and hundreds of apartments, and I've never owned a hammer. So I don't do any repairs on my properties. I build in the numbers before I start to get a good management company to take care of that for me. They're better than I am. When I build, I'll give you an example. When I build a barn, a big horse barn, I don't do it myself. I hire Amish guys to come in and do it. They get it done fast and efficient. They get it done right the first time. I'm not a plumber, I'm not an electrician, and I'm sure it's not going to plunge toilets, but I can build that. I can build that in before I buy the property. The numbers before you buy are the critical thing. And if the numbers work, I don't care what color the kitchen is. I want, those numbers, and I use 10% as a management fee. You can get it done for less, but I know at 10%, I can get the best of the best. And my managers now, they collect rent electronically. The ACH debit out of the checking account on the first of the month. I don't have anybody running around collecting rent like we used to do. If they, and interrupt me if you get any questions, but if somebody has something that goes wrong in the house, a toilet needs to be plunged or a burner goes out on a kitchen stove, the client takes a picture of it. Now, I've already got, when I bought that property, I document the heck out of everything that I own, pictures, videos. I know every serial number of every utility or appliance in that building. So if you tell me my left rear burner went out and you send me a picture digitally, I then forward without even having to talk to the tenant and or the repairman. That's all forwarded electronically to him. He orders the piece, he goes out and fixes it. It's a one-time trip, and we're saving all kinds of money by keeping our expenses down. We're not chasing rents and so forth by having the ACH debits out of their accounts. When we do a preliminary, let's call it a walkthrough, before they even get to see the property, before they even get in there, I have already run the background check on them. They can apply online. I know their credit report. I know their eviction report. Have they been kicked out of other apartments? I have a criminal report on them, all done in less than a second. I just hit the buttons, and they actually put the information in. So what I get is, this guy's good or this guy's not good, and I'm not.
So you've mentioned that you build it in the numbers to get started. So just kind of taking a finer point to that. So, okay, let's say I've got an IRA that I'm going to do self-directed, and we'll talk about that in a minute. But and I want to get into the real estate game, and I go to you or somebody that's similar in terms of having access to management companies and say, okay, I've got this target property. I can buy it for $100,000. Can that type of investor get access to the type of services that you just were chronicling for a reasonable cost?
Yeah, they can buy the program themselves that gives you access to all the reports and gives you access to doing the automatic debit out of the checking account, or they can hire somebody that does it. You don't want to hire a good old boy down the street who's been doing it for 40 years, because they still do everything, the old fashioned way. So you got to be a little careful. And I do kind of review that in the book. But if somebody wants more details, they just give me a call anytime, and I'll tell them, the names of the software and so forth that they can buy for themselves. And if they're going to be playing the game, they should own the right stuff to manage.
So what would be the three pieces of advice that you'd give somebody that's thinking, okay, I'm gonna jump into this world on a residential level? What type of things would you say there?
First of all, your timing's bad if you're trying to get into certain areas now, because interest rates are, I looked it up this morning, 5.96%. That's 6% interest, which is more than doubled in the last 12 months. Now you're looking and talking to a guy who lived and bought real estate back when Jimmy Carter was in office. So I know what high interest rates were. FHA was 16% when I was buying properties. Didn't stop me from buying them. It just didn't allow me to pay as much for the property. The numbers can still work based on the rent, and rents are at an all-time high. I don't know if anybody's seeing that, but it's insane how much we're getting. We bought a place recently. The rent the guy was paying $850. He moved out. We're now getting $1250 for the same place. That's a 50% increase. Now we didn't charge him an extra 50% because that's hard to charge. You can bump people up, but you can't clobber them. But the rent rates are so high because there's such a shortage of lower level properties, not cheap stuff, but just average properties.
That's a remarkable increase that the market will bear on that. So I'm just curious. You work in many different geographical areas. Where was that example from? Was that from the Florida markets, or
that one was in Pennsylvania, up in Gettysburg, actually, Pennsylvania. So that's almost the Maryland line.
And I want to note to the audience, in case they're hearing that occasional moan that's in the background is not the steaming herd over his shoulder, but rather my Bernese mountain dog on the floor, letting me know that she is annoyed by my talking. So Richard's in no danger.
The buffalo represent the economy we're in right now. It's coming, and it's quite a stampede that we're in the face of right this minute.
And I mean, I do want to get to one of the things in one of the contentions in your book about how good a market is for the people that are trying to move away from this. But you said something there about your experience that I find particularly fitting for the conversation we've been having on this program for the last few episodes, which is everything old is new again. We're going back to the 70s. And so knowing what you know and what you experienced then, if we're looking at a high inflationary market with somebody that wants to be in the real estate market, what type of opportunities does that type of environment present that maybe we didn't have a little while ago?
There's a couple different things. Number one, when everybody else is slowing down and not buying properties, which is what's already started to happen. It's like they turned the valve when interest rates went up, and the single families are starting to come down as far as volume of purchases. The prices haven't come down. They're still at an all-time high. And I say in my book, if you're going to sell, I mean, the old adage is buy low and sell high. Well, it's never been higher. So sell, get unload it now if you can. Now you may have waited a couple months too long, but there's still a lot of people looking for real estate out there. So if you've got something that you're thinking about selling and moving into something boring like a Delaware statutory trust where you've got no management, no toilets to be plunged, you just get a check every month while you're living in down in Florida. This is a great time to do that. And if it doesn't sell, that's okay too. I have a guy right now that's got 2 mobile home parks, and he's putting them on the market. He should have done it 2 or 3 months ago, but it's still not too late because there's a lot of people still hunting to purchase properties like that. And as long as the cap rate makes sense. Now, what a cap rate is, it's how much you pay for it. It's your net rent after income and expenses, your net rent that you're bringing in divided by what you pay for it. So it basically says that if I put $100,000 in a property and I want to get a 7% cap rate, that means I should be making $7,000 a year in profit on that property to get a cap rate of 7. So why is the cap rate important? Well, if you're paying 6% interest and your cap rate is 5%, you're less than what you're paying, you're losing money. So you have to have a cap rate that's equal to or more than the purchase price of the property. So that's the first thing I look at, and I can do that in 2 seconds. What's the cap rate on the property, my rent versus what they're asking, and I'll rule it out if it's not at above the interest rate that I'm paying right now, which we just talked about is around 6% for purchases. So that's one thing. Now, this is the greatest advice I can give anybody is pay attention to the auctions right now, because just as the market is slowing down on purchasers, the market for people who buy at auctions will slow down even more. Now you got to have incredible cash, or you got to have a line of credit from a bank to do an auction. They don't stand around while you try and finance it after the purchase. So we bought one last year $600,000 property, we're the only ones that showed up at the auction, and we paid $325 for it. So
Well,
we bought.
I imagine that, again, from your experience, if we look back in the '08 era,
Yeah,
when the market for real estate crashed, there's just so many opportunities for auctions coming out of foreclosures.
exactly. So you want to have cash. Cash is king in a market that's collapsing, and people are bleeding. There's people that got to get rid of properties sometimes, and they can't wait around to max it out. They can't wait 10 years for it to bounce back. So you want to be able to help them out of their problem by giving them, bottom line, here's how much cash I can pay for your property, or have a, good line of credit with a bank that works too. You got to line it up ahead of time when you're doing that. So, that's an incredible opportunity to fund and purchase auctions right now, because there won't be a whole lot of people at these auctions over the next whatever period of time as inflation runs high and interest rates are high.
There's not a day goes by that I don't get somebody that's texting me wanting to make an offer on my home.
Yeah.
It is that likely to slow down now because of the market?
Sure will. And yeah, that's exactly right. Just what you said, because the purchasers that I have, I've got a certain limited number of guys that have cash, millions of dollars in cash, who know how to move quickly and will take advantage of the right opportunity. Now, they've been paying full price for the last 12 months and not crying about it. But right now they've slowed down and they're looking as well. So if you've got professionals that are slowing down, and obviously, regular citizens who want to buy a place to live, that's slowing down. And I can't predict what inflation is going to do, but I can predict that if you spend $6 trillion on something, it's got to be printed, and that makes the value of the money worth less. It's a pretty simple formula that we're living in real life right now.
So I came across something, I can't recall where, but something at BlackRock, how much residential real estate groups like BlackRock own,
Right.
the big Wall Street firms.
Yeah.
Is that something that you see, in working in the pools of money that you work in, and that we've got people coming in bidding against you for some of this stuff, or what's that look like?
You know what? I've been doing this, well over 40 years, and I've never run across BlackRock as a competition. Now, I have sold some of my apartment complexes after I've bought them and done some dress up, some forced appreciation. I've sold like a 50 unit complex to Merrill Lynch, who then syndicated it and put it in one of their packages. Mm-hmm. Which was more tax shelter oriented than anything. But I'm sure. BlackRock, they're doing a ton of single family stuff. They come in and buy whole bankrupt subdivisions, is what they were doing after the 2008. Okay. And that's not what I do. Is I don't buy a lot of single family homes. I did 40 years ago. We built them and rented them out. But it's a lot more profitable to have an apartment complex. And I'll give you that example of the rent. If you increase let's say you have something simple, a 5-unit building, okay, and you increase everybody's rent by $100 a month, okay. If you divide that cap rate, that $500 by a 6% cap rate, that means the value of that property went up $100,000 just for that one increase. And then if you could, cut down on the maintenance fees and cut down on the management fees, and that increases the net income. You can force appreciation into an apartment building. You can't do that on a single family house. You can't. There's not much you can do, and it's If you're BlackRock and you get billions of dollars, that's a different world. They can control the market.
Is there, in your opinion, a good supply of inventory for, if people are looking for, 4 or 5 family units that they can go buy? Is that something that's there's a lot of out there? Or in my impression, there wouldn't be that much, that kind of opportunity out there.
First of all, it's regional. Pennsylvania, Frederick, Maryland, those areas, they've got zero inventory. You go to Fort Lauderdale and you look up multifamily properties, and you'll find, just in Broward County, you'll find 30 of them. So when I say zero, I mean, I pull it up in Adams County, which is where Gettysburg is. It's zero. No, there's none on the market. So you're exactly right. There's a terrible shortage of inventory right now, but you can go to other places. North Carolina is a good place. Southern Florida is a good place, because the Broward County, Miami complex has got 6 million people. It's big. It's twice as big as Los Angeles. People don't relate it that way, but it's huge. And it's got a lot of fresh money moving in from the north, fresh money moving in from the southern country. That's a market people should look at, and they can buy it at an auction. They can buy it just off the market, and get professional management to take care of it for them. And then when you're in Ohio, you drive down from Ohio or fly down, now your trip's tax deductible because you're checking on your investment property. I mean, that's and legitimately so. It's not, I'm not making it up and cheating them. It's a wonderful opportunity for people. That's why I got my license in Florida 20 years ago, because of that same reason.
So let's say hypothetically, I'm sitting on $1 million.
Right.
And I want to, I see the opportunity, and I'm cash. So the cost of money doesn't matter to me that much. As you pointed out, the rental rates have gone up so much. And I want to reach out to you and say, Richard, I'd like to try to find or build some multifamily property in Florida. Is that something that could be done?
Yeah, and I would ask you the question is who are you as an investor? Are you somebody that's 45 years old and has got lots of money and is not afraid to be an active investor? Because there's different phases of investing have different amounts of risk. If you're 65 and you've already made your millions and you're going to sell it and do a 1031 tax-free exchange, then you might get into the, something like the Delaware statutory trust, where you don't have any management, maintenance, or decisions to make. So to answer your direct question, yeah, there are definitely opportunities. We just did one. It's an hour south of Orlando in Sebring, large piece of land that an Israeli group to put nursing homes on, assisted living. It's huge. Assisted living is an enormous opportunity. And one of the little niches that people should be aware of, and I get a chapter in the book about it. It's residential assisted living, where you buy a house or build a house that's got 6 bedrooms, as an example, and you have 6 seniors that need assisted living. That's not nursing home. Nursing home, you're pretty beat up by the time you're in a nursing home, but assisted living means I forgot to take my pills twice this week. I need somebody to check on me, make sure I didn't fall out of bed, stuff like that. They charge for a room anywhere from $4,000 to $6,000 a month to live in those places. And the places are so nice. The ones that we're building are so nice that the kids want to live. It's almost as close to hotel luxury living as you can get, but it's in a residential area. And we've got, for example, in the basement, which people don't go down too much, but we've got an area where they can store all their lifetime treasures. They don't have to sell everything and make it fit in one little bedroom, which is believe it or not, a huge deal for seniors. So
yeah. I'd like to dig into that a little bit more. And there are other specific niches that you reference in your book. We try to keep our these conversations that are out the 20-minute mark. So would you mind staying over for another episode, and we can kind of go into some of those niches that you have? And also, I'd really like to talk about the equestrian niche that you have. So
absolutely.
Would you be available for us to continue
Sure.
on into the next episode?
I'd be happy to help.
Fantastic. So Eric, with that, first of all, before we cut this off, Richard, if you want to go ahead and let the audience know how they can reach out to you, we'll put it in the show notes, and with your permission, we'd also put a link to your book in there for people to get access to that. But as we close out this episode, can you want to go ahead and give some information how they can get hold of you?
The easiest way is to go to one of my websites. It's Florida, www.florida.cc, as in certified contractor. So florida.cc, there's no .coms, nothing. It's just florida.cc. Right there, the first thing you'll see on the top left is a link to the book that you and I are talking about. And there's all kinds of other information there too. But they can have a link to the book for free, and enjoy it. And if you got any questions, email me, text me, or give me a call.
Eric, as I always do, as we close out this episode, did the fly on the wall have any questions that he'd like to ask? Anything that's percolating there?
If I've got access to Richard, I'm going to ask questions. I've got one specifically. Richard, here's my situation. We actually just sold our home that we were living in. Perfect timing, in my opinion.
Yes.
Not patting myself on the back, but doggone it, it was a really good market. And I've had a rental property for about 20 years. We decided to go ahead and move into that because I wanted to do some repairs on it. I already own it, and I don't want to buy a house in this market, right? I mean, that's the kind of the thing that I'm thinking. Right. And the plan is to wait 3 or 4 years. Now, my question is, in 3 or 4 years, do you think, and I know you've been out of the single family thing for a long time. You said that you'd been out for about 20 years, but is it better to turn this back into a rental in 3 or 4 years? Or do you think I should sell this property and then get into something like I'm assuming the Delaware Statutory Trust, or a situation where I can be an investor in with a larger group? What do you think?
Yeah, I think if you, first of all, if you convert it to your residence, and I forget, Greg, what the number of years, if it's 3 or 5, that you have to live there in order to get, because right now you don't have to pay any capital gains on your personal residence if your wife and you sold it for $500,000 worth of profit or less. Not the sales price, but your actual net profit.
Correct. Yep.
So, number one thing I try and teach people and is don't pay taxes if you don't have to. So you avoid the capital gains. When you move back into that rental property, you converted it now to the same situation where down the road, if you wait enough years, and I'll look it up and see whether it's 3 or 5, I'm just not remembering right this second, then you can avoid paying those taxes again and do whatever you want with the money. Worst case is you do a 1031 exchange and buy a larger apartment complex, 4 units, 6 units, 10 units, or if you're done investing, that's when you convert it into the Delaware Trust, because they're just boring and wonderful in that sense, where you really you'd have a hard time losing money in those, and you have no headaches, no management fees.
All right.
Does that help?
I appreciate it. Yeah. And obviously your book is in my future, so I'll be checking that out. Again, thank you guys so much for this. Richard, I appreciate you being on the show. I'm excited that you're coming back. Greg, of course, as always, thank you so much for facilitating this and having him on the show. And our last thank you goes to you, the listening audience. Thank you so much for tuning in and listening to Your Financial Advocate with Greg DuPont. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Greg comes out with a new podcast, it'll show up directly on your listening device. That makes it really easy to share these podcasts with your friends and family. And think about those folks that you've been talking about this kind of stuff with. They're going to want to hear this. They're going to want to hear both episodes. So please share this with them. Again, thank you so much for listening today. For everyone at DuPont Wealth Solutions, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to Your Financial Advocate. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of DuPont Wealth Solutions. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.